Hello everyone, thank you for joining us on this Wednesday morning and welcome to this educational presentation. Now today I'd like to talk to you about next level short-term trading. I would venture to say that most traders really have some type of allure with short-term trading. They're really attracted to it. I mean, think of it. It really is attractive to think that possibly you could make anywhere from $100 or $200 a day to possibly a couple of $1,000s today. The only trouble with that is that most traders really aren't ever able to reach that level of their short-term trading. There's usually one thing standing in the way. Now, in today's presentation, I'm going to share with you what I think that one thing is in order to take you to the next level, and I'll also give you all the rules to a great technique so that you can start applying it as early as today if you'd like. But first of all, let's look at this example here. Here's an example in XLNX. Now, most traders looking at this on a short-term basis would say, well, nothing much happening here. In fact, it's sideways or a non-directional market. So we've always been taught to stay away from those markets, right? So you don't want to do anything because you feel if you get in, it'll go the opposite direction. Might as well wait for some type of direction or some type of clue as to which direction it may go. Well, with the technique I'm going to be sharing with you today, it actually generated a buy signal right here where it looked as if nothing was happening. And look what happened the very next day for this short-term trade. 18 points in one day that could have gone your way. Not a bad little trade for a one-day trade, right? Well, with today's technique, I'm going to share with you how you could actually be in a trade for one day for the real short term, if you like, or stay in it longer for anywhere from 2 to 3, maybe in a month or so, 2 or 3 weeks to a month. Now, all of this is made simple by using the PTS Primo charting platform. This is the educational platform you've been searching for because it really teaches you how to trade. It's like having your own personal mentor sitting with you 24/7, right there next to you all the time. So welcome. This is going to be a great educational presentation. My name is Steven Primo, President and Founder of Specialist Trading. If you're new to my webinars, I often say this before, but if you come here thinking that, excuse me, I'm going to share with you what I think the market's going to do next week or tomorrow or even today, or if you come here thinking I'm going to tell you what the best stock is to buy or the best time frame, you've really come to the wrong place. I would suggest going to someone else's webinar or to another website because that really goes entirely against our philosophy. We are, first and foremost, an educational company. So what does this mean? It means that our only goal is simply to give you all of the techniques, strategies, and actually trading wisdom so that you can ultimately make your own trading decisions. See, a good mentor does not trade for you, but he teaches you how to trade. So that's why we never try to predict what the market's going to do. We never try to tell you what the perfect time frame is or the perfect market because that's up for you to decide. All our job is to simply give you these things that have stood the test of time so that you can ultimately make your own trading decisions. I know a lot of you are saying, well, how do you know all this stuff? How come you seem to have things that have stood around for a while? Well, it's because I've been trading for over 4 decades. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name specialist trading. A specialist is someone who made markets in roughly about 50 or 60 stocks. So that's what I did during the crash of '87 and the bull market that followed. So in my 43 years of trading, I've seen straight up markets, straight down markets, sideways markets, any type of system, any type of method you can think of, regardless if you think it's brand new or never been heard before. It's probably been around. It's just been rebranded or renamed. So I know what works in terms of consistency and I know what doesn't. And that's our job. We simply provide and teach all of our students around the world all the things that have shown high levels of consistency. And if you don't believe us, go check a lot of the online testimonials. There's tons of students we've had that have been trading for years, if not decades, to students that just started trading that have these now high levels of consistency, because for the very first time, they've learned how to be in sync with the market and make their own trading decisions. So this is what we're going to be talking about today and apply it towards short-term trading. But before we do, as always, we are first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples are strictly for educational purposes. Now, since we are an educational company, we like to give you education on a daily basis. So if you haven't done so already, please feel free to follow us on Twitter. There's our handle right there. I post different information on a daily basis. Today I posted some great education about one of our really nice features on our platform called the Fluid Buy Sell Line. So I invite you to follow us on Twitter Every day I post information anywhere from little bits of financial wisdom to little bits of educational wisdom as well, okay? Now remember, we are first and foremost an educational company, so that's what we're going to be focusing on today. As a teacher, as a mentor, my goal once again is not to force feed you signals, it's not to tell you what to trade or what market to trade or not to tell you what I think is going to happen tomorrow. It's simply to teach you how to trade with the specialist edge. It's the same edge that was taught to me some 4 decades ago, and hopefully I'll be able to instill the same things that were instilled in me so that it can sustain you for possibly 20, 30, 40 years down the road, okay? Just like it's done for myself. Now, since this is a class today, I want you to ask me as many questions as possible, but please wait till the very end of today's webinar. We have a good crowd here today and don't want to take too much time out of your Wednesday. So if you have a question, please wait till the end of the class, probably in the next half hour or so. If you have the most common question, I'll answer that right now, which is this being recorded? Yes, it is. So we will send each and every one of you a link to this recording at the very end of the class today, all right? With that stated, let us begin today's presentation. All right, so what is the secret to short-term consistency? Because remember, most traders have this allure towards trading short-term. They say, wow, if I can make a couple $100 a day, that would be a nice little extra income, or maybe even $1,000 a day. That would be fantastic. I could retire early. But most traders never get to that goal. They're always, that success and consistency seems to elude them for some reason. There's a secret behind this. I know you may think, well, it's because you have a bad system, or it's maybe because you're trading the wrong market or the wrong time frame. But it's really more about something else. The secret is you have to want what the market wants. I know a lot of you are saying that. What does that mean? Well, think of it. If the market wants to go up and you're losing, it's because basically you're betting for it to go the wrong way, the opposite direction. You're selling when it wants to go higher. And conversely, if you're buying, but the market wants to go lower, most likely you're going to be losing, right? So you have to want what the market wants. If the market wants to go higher, then you want to be a buyer. If the market wants to go lower, then you have to be a seller. Now this seems very simple. Seems like trading 101, right? Trend is your friend. But the trouble is that most traders do not know what the market wants. We have these preconceived ideas, we have these indicators, we have these predicting things, we have these guys in a chat room that are telling us what the market's going to do, and it just confuses us, and most likely we end up out of sync. For example, right here, someone would say, well, obviously, Steve, the market wants to go lower, so I'm going to sell. And just when you sell or you think you're in sync with the market, look what happens, right? See, the trouble is we're using outdated tools. We're using misinformation or traditional wisdom that really doesn't seem to hold up well. It'll have a certain level of consistency, but over time, it really is not going to help you. What we really need, more than anything else, not a predictive tool, not an indicator, not an overbought, oversold type of thing, but what we need is a translator, something that is able to trade in sync with the short-term trend, that translates what the market wants to do. You see, we don't want to predict how high or how low something will go. We don't want to say when the market's going to turn or reverse. All we want to know is what's happening on a tick-by-tick basis. What do you want to do if you're talking to the market? Do you want to go lower? Do you want to go higher? That's all we need to know. Now, the best tool I know of that I've been using for 4 decades is the PET-D, because it really is a translator. Its really main purpose is simply to translate what the market wants to do on a tick-by-tick basis. Now, I first learned of this tool when I was trading on the floor of the Pacific Stock Exchange. At that time, we used to call it the formula because we had to calculate the specific formula almost on a tick-by-tick basis, and it was just too difficult or too cumbersome to do. So guess what? We've taken all the hard work out of it for you, and now we've formulated it into a proprietary algorithm. So with the help of high-speed computers and programmers, we've made it into a color bar tool. So if you see a series of green bars, it's telling you that the market wants to go higher. If you see a series of red bars, it's telling you and translating the market wants to go lower. Now, one of the best ways to use this is as a signal confirmation tool. Let's say you're trading based off news, or let's say you're trading based off the full moon. It makes absolutely no difference. But when your strategy or method generates a signal, you want to confirm it with the PET-D. So in other words, if you get a buy signal, well, that bar or that series of bars should be colored green. If you get a sell signal, regardless of what it's based off, it could be based off earnings, that bar that the signal has been generated off should be colored red. If it's not, you are out of sync. You do not want what the market wants. But I think the best way to use the PET-D is as an early trend detector. There are literally dozens of ways to apply it, but as an early trend detector is really the basis. It's really the benchmark for using the PET-D. Let me show you what I mean here. Remember, we thought we knew what the market was going to do. We said, well, okay, well, the market wants to go lower, and then all of a sudden it shifted and went straight up. Once we apply the PET-D, all you have to do is click it on our platform, click the PET-D tab there, and the colors automatically change. Now, looking back in hindsight, we knew well in advance that the market wanted to go lower way up here. And we knew well in advance that the market wanted to go higher down here. So as it says, the beauty of the PET-D is that it tells you which direction you should be trading. And once you know, you can apply virtually any technique or any method, any system in sync with that direction. And we strongly feel that it will increase your odds for consistency tremendously, because for the first time, you are wanting what the market wants. Okay, so now that we have this tool that's going to help us, how do we trade with it? All right. Well, here's the short-term trading technique using the PET-D that I'm going to share with you today. This is extremely simple. I mean, it's probably one of the simplest techniques the PET-D has generated, but you're going to see how powerful it is. Now, remember, the PET-D is just really a translator, but there are literally dozens, if not hundreds of ways to apply the PET-D to your trading. We're just going to share with you one of those ways. All right, let's say you're a buyer and you want to buy the market. How would you be able to find a buy setup using this technique? All right, here are the rules. After a series of same colored bars, a green bar closes, either at or very near its low. All right, so what does this mean here if we look at this description here? Well, let's look at this example here on this generic chart. All right, someone looking at this would say, well, nothing really much happening here. But once we apply the PET-D, we see that we have a series of green bars. Some of these bars were down, but they're still colored green. Some were up, but they're still outlined green. So after a series of green bars, could be a couple of bars, could be one bar, could be 20 bars. But after a series of green bars, you want to look for a bar that either closes at or very near its low. So as we look through all these bars right here, where do we find one? Right here, okay? It didn't close at its low, but it closed very near its low. Now this is going to be a little subjective, but you'll be able to get a better feel for this once you practice. So this is where you want to be buying. Now remember, since this is a technique and not a strategy, you can buy wherever you want. You can buy at the market, you can buy in the close, you can place a limit, you can buy it once it trades above that bar. It's up to you. But whatever you do, you should be looking to buy right here, okay? And this would have been a great idea because look what happened after that. You see how simple this is? We didn't have to look at volume. We didn't have to look at earnings. We didn't have to look at jobless claims. We didn't have to go to a chat room and spend all that extra time listening to what some guy was telling us who predicted what the stock's going to do. All we had to do was listen to the source. What's the source? It's the market we're trading. And the PET-D translates what the source wants to do. All right, so let's look at the sell setups. They're the same thing, basically. We're just going to turn them upside down. After a series of same colored bars, a red bar closes, either at or very near its high. So as we look at this chart here, someone's saying, well, this is kind of going low, but we kind of have a doji bottom here. Maybe looks like we're going to go higher. This is a morning star pattern here, so this is really a bullish pattern. All right, once again, we don't want to use conventional wisdom, candlestick patterns, traditional wisdom. Let's listen to the source. What is the market telling us? Well, we use our translator, the PET-D. And the PET-D is telling us all these bars are red. So what is the market telling us? What is the source telling us? It's telling us it wants to go lower. So we don't care what some candlestick pattern is. We don't care what some Fibonacci support is. We don't care what the earnings estimates are supposed to be. The market, the thing we're trading, is telling us. The very source of our profits is telling us it wants to go lower. So remember, we want what the market wants. So we just have to add a little structure. We want to now look for bars that close either at or very near the high. So we look through this series of red bars here, and here we have one, all right? And we continue to look, and we have another one. So these are both our sell setups right there. And look what happened after that. Once again, simplicity equals consistency. The more you complicate your trading, the more rules and techniques and fundamental analysis and indicators and economic news and chat rooms and blogs you add, the less consistent you will be. If you've looked at traders who have been trading for a relatively short time, 3 to 5 years, most of their trading plans are extremely complicated. A lot of convoluted logic, a lot of indicators. I know firsthand because that's the way I used to trade when I first started trading. I had tons of indicators, tons of news events, tons of information coming in from all this economic news. Once I started to strip away what my mentors called useless noise and just basically focused on the source, which was the chart in front of me, that's when consistency starts to show. So that's what I'm trying to instill in you. I want you to make your trading as simple as possible. It's often been said, it's the easiest thing in the world to overcomplicate your trading. Anyone can do that. It doesn't take someone with a lot of character to pile on more and more information. But it really takes a lot of character to simplify your trading, to strip away this useless noise. But once you do that, that's when you're on the road to consistency. All right, so let's look at some current technique examples, all right? Using this very simple but powerful technique with the PET D. And then remember, we'll stop for questions at the very end. All the displays you're going to be seeing here, by the way, everything was executed using our PTS Primo charting platform. This is the educational platform that teaches you how to trade. And you'll see how simple all of this is. It's one click away, instant access on the PTS Primo charting platform. We designed it that way to make trading simple. All right, so let's go through the process. Let's say you're looking at SE right here, okay? This is C Limited, and you're saying to yourself, well, I just got out of that chat room that I subscribed to, and they don't like this stock. They say that it had a nice run-up right here, okay? But at this point right here, it's overbought. That proprietary indicator that I bought for $5,000 is telling me that it's way up too high. And it's starting to come down. Now we have 2 consecutive lower closes. So I think I should sell this, or if I'm thinking about buying, I'm going to wait. All right, to see how all my decisions are based on an outside source. They're not based on what the market's telling me. They're based on some convoluted indicator, something that's not translating but predicting what the market's going to do. What is the source telling us? Well, if you have our platform, the first thing you want to do is click on the PET D right here in the upper green strategy tab, and the colors automatically change. So now what is the translator telling us? Even though you may think it's overbought, all of the bars are green. So now we want to look for and identify bars that close either, a green bar I should say, that closes either at its low or very near its low. So as we're looking through the series here, we don't find any except for, well, this one is close to its low, but it's not that, we still have a little candle here. But this one is really close to its low. So that's what we want to buy. I don't care what some guy in a chat room saying, that's a high probability entry point. However you want to enter. You want to be more conservative, maybe you would enter once we traded above the bar. Maybe you want to place a limit lower. Maybe you want to wait for it to go above the open. It's up to you. This is not a strategy. It's simply a technique. A technique is just one piece of the puzzle. But having said that, you should be entering somewhere around here because look what happened. What happened to the overbought? The stock went up 20 points. Potentially, you could have captured 20 points if you stayed in long enough. Here's another example in DRQ, okay? Someone looking at this would say, wow, Steve, come on. I took that $10,000 class with the support and resistance and the institutions, and they're buying right here. Look at, we've made almost a double bottom. There's a bullish engulfing pattern right here. We're starting to go higher. Why would I want to sell this? The market, the way I, am analyzing it, is telling me that it wants to go higher. You said to want what the market wants, so it's telling me that it wants to go higher. Okay, but remember, what are you basing your decision off of? Off an outside source, with the institutions, right? The institutions, when I used to trade for them, had the worst track record. I would never follow them. They were almost always wrong whenever I traded them. Remember, I used to be in charge of making markets for roughly about 50, 60 stocks. The institutions would regularly give me orders, enter orders in my book, maybe 500,000 shares here, maybe 2 million shares here, and they were consistently wrong. So I would never base my decisions off of them. I want to base my decisions off what the market's telling me, the source, okay? How do I do that? Well, I have to use my translator. The translator is the PET D. On our platform, click on the translator, PET D. What are the color of the bars? They're all red, either outlined red or colored in red. So what is the market telling me? I don't care what the institutions are saying. What is the market telling me? It's telling me it wants to go lower. It just hasn't done so yet, but until we have a series of green bars, the market is translating and wants to go lower. So now my job is to put a little structure to it so that I can get in. All right. I just don't want to sell at the market because after all, I may have to wait a week or so before something happens. I want to get a good price, or it may change its mind. So I want to get in at a good level. How do I do that? By looking for a bar that closes either at or very near the top of its range. And it's right here. Okay. So you could have sold here, waited a couple of days, but then ultimately it kicked in for 12 points. What happened to that institutional support? What happened to that Fibonacci support? What happened to that bullish engulfing pattern that was supposed to call for a reversal right here? To see how those things really don't have a high level of consistency. Remember, like I always said, I was trading with these things 40 years ago, and they didn't show high levels of consistency then, so they're not about to miraculously change and start being tremendously consistent now. The road to consistency lies in wanting what the market wants. All right, here's another example, KLAC. We close in the very bottom of its range. It's a green bar. Here's our buy setup. 22 points in the next week. Not a bad little short-term trade, right? How about this? A lot of students always said, well, Steve, what happens when the trend changes? We went straight up and then we went straight down. Well, we just go with the trend. Remember, we just want what the market wants. When the market was green here, it wanted to go higher. So we look for bars that close in the bottom 25, or I should say the bottom percentage of their range here. And if we'd taken the very first signal, potentially we could have captured 30 points. Now, what happens when the bars change colors? Well, now we just look for the opposite. We look for a bar that closes near the top of its range, right here and right here. You could have potentially made 10 points to the downside. How about DDOG? All right. Well, all the bars are green, so we look for a bar that closes either at or very near the low of its range. We have one here and one here, but nothing much has happened coming into October. This was just a couple of weeks ago. So we're kind of just sitting on this at the same price. Ultimately, it kicked in coming into this past week, 24 points to the upside. Not a bad little short-term trade for a week or two, right? And if you missed that, you could have had a really short-term trade buying this right here and getting out on this quick update. You see, it's up to you. We teach you in our courses different exit levels, different stop placements, but it's up to you how long you want to stay in the trade. I'm not saying you would have made 24 points. Some of our students would have taken this technique entry point and said, hey, I got a couple of points, I'm getting out. Others would have taken 5 points and said thank you. Still others would have stayed in for 20, 24 points. You are in charge. Remember, I said that at the very beginning. Our whole goal is to teach you all these high probability setups, these high probability exits, these high probability entry points and stop placements, so that ultimately you will make the decision as to where you want to get out, as to where you want to place your stop, not us. Remember, a good mentor does not trade for you. He teaches you how to trade. Beyond here did the same thing. Just last week, a couple of weeks ago, 2 buy signals were generated. Coming into the first week of October, 45 points to the upside. Now, I'm sure most of you wouldn't have stuck out for that 45 points. Maybe you would have said, listen, once I have a 10-point gain, I'm getting out of here. That's okay. There's nothing wrong with that. Here's an example of when the trend changes. This was in the spiders again, coming into October. At the end of September, we were going lower. And then all of a sudden, we switched to go higher. How could this technique have helped us? Well, we find our first sell right here, where we could have made potentially 10 points on the spiders. And then once the trend changed, we look for bars that close either at or near its low, and we have one right here for a potential 20 points in 4 days, okay? So potentially you could have captured 30 points. I know a lot of you say, well, Steve, that's if I sold and then bought at the very low, or if I bought and then sold at the very high. Okay, so let's say you didn't do that. Let's say you only got half of those 30 points. Not bad trade here. For 2 trades in less than a month, you made 15 points, okay? Let's say you only got a third of that. All right, so maybe you only made 10 points. That's still a really nice, percentage there of the total you could have made. So we're not saying that you would have made a total of 30 points here, but that's how much you had to work with. If you only took a third of that, 10 points, that's still a nice little trade value there. All right, here's the opening chart we started out with, an XLNX. Remember we said this is a sideways non-directional market. This is why most short-term traders fail, because they're not wanting what the market wants. Now, someone looking at this would say, well, Steve, the market wants to go sideways. Now, on face value, it looks that way. But remember, we're using outdated ways of finding out what the market wants. We have to use a translator. So what is the market translating what it wants to for us? Well, we click on the pet D, and now it's translating something entirely different. We're not looking at a sideways range. We're not looking at support and resistance. What we're looking at is just the color. And we look for a series of green bars, and then we look for a bar that closes either at or very near its low. And we find it right there, which was on the 8th of October. This was just last week, not even a week ago. You could have purchased it, and in one day potentially made 18 points, okay? Not a bad little short-term trade, right? Do you see how we didn't look at anything related to fundamental news? We didn't concern ourselves. I'm sure there was some announcement which caused this to gap up 18 points. I have no idea. I stopped looking at fundamental news 40 years ago, so I wouldn't have any idea. Fundamental news is not a requirement in specialist trading. You can use it if you want, but it's in no way required. Do you see how we didn't look at volume? Do you see how we didn't have a ton of indicators on the screen or a ton of lines there, moving averages? Do you see how you didn't have to come to a chat room or to a blog to find out what to do with this stock? Do you see how you didn't have to listen on TV to find out what it was going to do? You made your own decision based off this really simple technique. That's what we're trying to instill on our students. We want you to be in charge of your own decisions. All right, let's look at Facebook. And here's another example of sometimes you have to wait a little bit. There was a buy signal generated right here in the middle of August, and it sure went up. You would have still had a profit, but not a very big one. And then another buy signal was generated right here. Ultimately, it kicked into a nice, potentially 48-point gain coming into September. All right, once again, another example of when the trend changes. All we do is just change with the trend. All right, we want what the market wants. The market wanted to initially go lower. So while the bars are red, we look for these bars that close in the top portion of the range right here. We would have sold and potentially captured 35 points. Now, once the trend changed, we look for bars that close either at the low or very near the low, and potentially we could have captured 45 points in about a week, okay? All right, so that's roughly, we're talking about 80 points. If you only were able to capture half of that, you still would have been able to capture 40 points. Do you see the value in these techniques? You don't have to get in at the bottom and get out at the top and vice versa. You just have to be able to capture a little bit of that, and you can still be very successful. All right, let's look at ROKU. Once again, someone looking at this would say, well, this looks like it's rolling over, Steve, and if I want to do what the market wants, I want to be a seller, right? Well, we had our translator, and it's translating that even though we had 2 consecutive lower days, they're both colored green. So the translator is saying, no, I still want to go higher. So we have a bar here that closes very near its low. That's our buy setup. 50 points in the next couple of weeks coming into last week, okay? All right, let's look at REGN. Now, this just happened, coming into last month here, but just looking at 2 bars, someone would say, Steve, I can't make a decision just based off 2 bars. Sure you can, because once you have your translator, you just click it on, and you see here that it's telling you it wants to go lower. But someone would say, but Steve, the last day was up sharply. You see that? It closed near its high. It sure did. And since it's outlined red, that is this technique's sell point. So where someone would say, that's a reversal, Steve. We closed lower, and then we closed higher. In my book, that's a reversal. But in our book, once you learn how to listen to the market, that's a sell setup. So how well would that reversal would have worked on the very next day? Look what happened here. All of a sudden, if you wanted to take a short-term trade in this, I'm sure this is expensive stock, so I'm sure you most likely were not short the actual stock. But let's say you bought the puts. Or let's say you had a spread with some bias to the downside. It's up to you. Remember, you're in charge. Well, you could have taken a quick 35 or 40 point gain in one day and said, thank you very much, I'm out. Or if you wanted to stay in longer, 70 points potentially coming into October. Here's another example in QDEL, QDEL Corporation. All right. Once again, someone looking at this, let's say you went to a chat room. So many traders love to go to chat rooms or trading rooms, right? Let's say the organizer of that room says, well, according to our analysis here, that's major, major resistance. We have a lot of selling pressure right there. And on top of that, this is some type of resistance here. This is a resistance line with some Fibonacci levels. This is going back many, many years, so you don't want to buy here unless it's a breakout. And if, for all intents and purposes, you should be looking to go short. All right. This is what happens usually in those trading rooms. That's why we don't have them at specialist trading, because that goes against our principles. We don't want to be telling traders what to do. We want you to decide based off of the things we teach. So this is why we don't have trading rooms. This is why we don't believe in, overbought, oversold. This is why we don't believe in support and resistance. We only believe in the source, which is what we're trading. And what's it telling us? Well, we apply our translator, the PET-D. We click it on, and the source is telling us that this wants to go higher. Why? Because all the bars are colored green. So now that we know that it wants to go higher, we know what it wants to do, we just want what the market wants. So we look for a structured entry, and that's looking for a bar that closes either at or very near its low, which is right there. So you could have purchased, bought calls, maybe a spread, maybe actually purchase a stock, whatever you want to do. 90 points coming into this past week, okay? All without the aid of fundamental news, all without looking at economic indicators, all without worrying about the election. None of that is required. Remember, it's the easiest thing in the world to overcomplicate your trading, but it's the most difficult thing in the world to simplify it. But once you do, that's when you start to see that consistency. All right, let's look at some other time frames real quickly and some other markets, just to let you know that it doesn't just apply only to daily bars. Let's look at a weekly chart of BIIB. Let's say that you're interested in shorting this, okay? Well, here's your sell signal. You could have purchased puts right here based on this bar that closed at or very near its high, colored red. 50 points in 3 weeks. Not a bad little trade, right? Or let's say you were interested in getting into Nike on a weekly basis as an investor or a swing trader. All right, this was going all the way back to June, July. We had a series of green bars. So now we look for a bar that closes either at or very near its low, right here, right, on this weekly bar. 36 points coming into October this week. If you missed that initial buy signal, there was another one generated here just last month in mid-September. Let's say you're long RETA and you feel uncomfortable because it's not acting well. And you're thinking, should I buy more, or maybe is it reversing, or what do I do here? That guy on TV says he likes the stock because it's been going down, but then it's suddenly reversed here. But according to the translator, it's telling me to sell. Well, I personally would sell because I listen to the market. I don't listen to some guy on TV the way I used to when it cost me a lot of money. And look what happened. 65 points to the downside in 2 months. So you see how listening to the market really helps you a lot more than listening to some guy on TV. Now, here's an example of a 4-hour chart in the Swiss franc for all you currency pair traders out there. What traders love to do is they love to play the victim game. They love to look at this in hindsight and say, wow, I missed this rally. How come I can never get involved in these ones? I'm always trading something else and I never know when it's going to go up. I always get in something and it goes straight down. Remember, your job as a trader is just simple. It's twofold. Listen to what the market wants and then jump on board. All right? So the first thing we want to do is find out what the market wants looking back in hindsight. We click on the PET-D, and we knew well back here in advance, before it started this rally, that the market wanted to go higher because all the bars were green. This was in the beginning of September. So you didn't have to play the victim game. With the PET-D translator, you could have said, wow, okay, well, the Swiss franc really isn't doing much, but here's a bar that closes very near its low, so I'm going to buy. And if you missed that one, you had another chance to buy here, and then yet another here, here, and ultimately here. Had you taken advantage of the very first setup, you could have potentially captured 200 pips, which translates over $2,000 per unit, okay? So see, one of the reasons why, in my opinion, traders love to use an outside source or take their decisions from someone or something else is that way you take yourself out of the game. In other words, you're no longer responsible. You can always blame someone or something else for not being in that big stock run-up or for losing money. It wasn't your fault, right? It was somebody else that did it to you. But once you learn these tools, you have to take responsibility for your actions, but that's okay because you'll be a consistent trader now. and you'll have no one to congratulate other than yourself. So that's the beauty of being in charge of your own trading destiny. Let's look at a totally different market, the E-mini futures. Here's a 15-minute chart. This was just this past week on the 13th, which I believe was just coming into yesterday. All right, here's a 15-minute time frame. Someone looking at this would say, wow, it looks like it's kind of bottoming here. But if we apply the PET D, our translator is telling us, no, it's not, because all the bars are still red or outlined red. Now we want to look for a bar that closes either at or very near its top, and that's this one right here. So we sell, and in roughly about an hour, you could have made close to 15 points. All right, that's close to $750 per contract. Potentially you could have captured. And there was another sell signal generated just about a half an hour later if you missed the first one. Okay, so let's recap before we go into the question and answer portion. After a series of the same colored bars, we want to see a green bar that closes either at or very near its low. For sells, after a series of same colored red bars, we want to see a bar that closes either at or very near its high. Now, extremely important points to remember. This is not a strategy, okay? I don't want you to think, wow, that's a great strategy. Okay, Steve, so where do I get out? Where do I place my stop? How do I track the trade, okay? How many shares, how many contracts do I buy or sell? Remember, we didn't talk about advanced entries, we didn't talk about stop placement, we didn't talk about exits, and we didn't talk about money management. Excuse me. Those are all important pieces of the puzzle. You see, you need all of these things in order to make a valid strategy. All we did was share with you a high probability entry point, which is just one piece of the puzzle. But we didn't talk about exactly where to enter, exit, place your stop, or money management. So you have to take that into consideration. That's why this is just a technique. Now, before you ask me questions, I want to ask you one. Ask yourself and ask yourself honestly. We're already in the last quarter of 2020, all right? Do you think this technique can help your trading going into 2021? Now remember, we all make promises to ourselves at the very beginning of the year in January where we want our trading to be by the end of the year. Well, we've only got a couple of months left, and most likely you're not anywhere near where you promised yourself you would be. Take your trading to the next level. Here's a great way to do it. We have a great attendee discount for all of the attendees today. We're going to offer you the PET D. That's the Primo Early Trend Detector. This is your translator. It can be applied to any market, any time frame, and in any direction. This includes the add-on, so you can apply it to your current program. Let's say you're using TradeStation or Metastop. You can upload it to that platform, and you can start seeing the colors automatically change green or red. This also comes with 2 extra trading continuation techniques and 2 pullback techniques. Also a trailing stop technique. Now let me share with you another technique that is just as important that we didn't talk about today, but this is really one of the most popular techniques for using the PET D. As we look at this older chart of the spiders here, someone looking at this would say, well, Steve, this is a reversal, all right? This is classic technical analysis. We open higher, close lower, all right? So we're going to go much lower. I'm going to short the market. After all, we've been going straight up, and here's our reversal pattern right there. And then look what happens, okay? Goes higher, right? So you lose a lot of money. And then right here, what happens again? We open higher and close lower. But this time you say to yourself, well, I've lost too much money. I'm not going to take that chance again because this market looks like it's going to go straight up. Well, with the PET D, remember, one of the best ways to apply it is as a confirmation tool. Whenever you think there's a sell in whatever strategy, whatever technique, whatever system you're using, it should color that bar or that series of bars red. So as we apply the technique, we see that this is colored red. So it's confirming our reversal pattern. Whereas this one was colored green, and that is your signal that you would not have taken this. And then look what happened. The spiders fell 19 points. That's a lot for the spiders because that represented an 18-point drop in the Dow, or I should say 1,800-point drop in the Dow in just 1 month, all right? So this was in March when the COVID news came out about the pandemic. Isn't it funny how the PET D, the translator, translated this for you well before all of the negative news started coming out in April and May, okay? So This is our roadmap for any market. Now, one of the best things about this is that you're also going to get educational correspondence. You're going to get my personal email address where you can contact me whenever you like and ask me questions. But we also have another great bonus for you. Now, remember, we're going to supply you with the add-ons. That means if you have Metastock, Sierra Chart, MT4, TradeStation, even NinjaTrader or Thinkorswim, you can apply the add-ons to automatically color the bars green or red. But we're going to take it up to the next level because we're going to offer you, till Friday only, 12 months free of the PTS Primo charting platform. It is so much simpler to use the PET-D on our platform because it's just one click away. You don't have to worry about uploading it onto your computer. You don't have to worry about opening up the edit box, get to the indicator, find the indicator, click it on, and by that time you've missed the trade, right? This is just one click away. It's right there on your screen. You're going to get one-click PET-D access. You're also going to get our enhanced buy-sell line, 4 different features for determining the overall trend, our strength of trend tool that I developed with Pro Trader Strategies that has an amazing ability to figure out whether there's more strength left in a trend or not. Over 90 of the most prominent technical indicators along with our auto-generated exit levels. These are great, great extra tools over 40 years of experience and things I've accumulated along the way. One click away on the platform. But here's the best thing I think about our platform, our signal scan. Because you can actually scan every night for stocks and find out whether they have a red PET-D color or a green PET-D color. For example, let's see something you could have scanned last week. All right, this was in LIVN. Let's say you scanned this and you saw through the scanning process, which takes about 2 minutes a night, that this was actually a green bar. But you had noticed during the day that it closed on or near the very low of its day. So this was your buy setup. This was on the 9th, just last week, I think about 3 days ago. You could have taken advantage of buying this and the stock jumped up 18 points the next day. All right. You think this could have helped you? You see, in our webinars, we've noticed that a lot of webinars and educational, so-called educational classes people attend, they have these great setups. And then you look at the date and a lot of them are 5, 10 years old. Well, this happened yesterday, okay? Or I should say last week. I'm sorry, 3 days ago. I'm a little bit jumping the gun there. But I'm sure there were ones that happened just as well yesterday that we never found. So this could have happened last week had you had the platform and the scanning ability to scan for this, all right? So this all comes included with the package. You're going to get the PET-D, 2 continuation trading techniques, 2 pullback techniques, a trailing stop technique, along with educational correspondence, and along with a full year use of our platform. This is our roadmap for any market special. All right, the PET-D course application and platform will cost you $29.95, but guess what? We're also going to include payment plans, okay? So you'll be able to, for a small deposit, you don't have to come up with $29.95. For a small portion of that, you can still be up and running today and get, along with that, a full year of our platform free. But that's through Friday only, okay? You only have about 2 more days left, 3 including today. So take advantage of this. This is a great, great offer. And like I always say, a year from today, you will have wished you became a member of this course. You don't want to be where you are a year from today because most likely you won't have that consistency. Become a member of the PET-D course. You'll have me as your mentor and as your guide. I will answer any question you have via personal email correspondence, and you'll be able to take advantage of this great, great translating tool. Here's how to take advantage of this. Contact Pro Trader Strategies. I developed and designed the platform with them. They're in charge of all the discounts and all the payment plans. You can call them directly at 310-598-6677. They have trading consultants manning the phones right now. They would be more than happy to establish a payment plan with you. All you have to do is talk to them. They don't want to sell you anything, so don't worry. There's absolutely no, any type of reference to making any specials or deals with you if you happen to call them up. They're not going to pressure you into any sales. They answer questions and they'll give you some type of estimate for a payment plan. So there's absolutely no obligation. Call them at 310-598-6677. Now that link you see on the bottom is the link to the sign-up page if you want to sign up online or if you want more information about the PET-D and about what we're offering in the course. If you look in the chat box on the far right-hand corner of the GoToWebinar column, we've posted a live link, so you can click that on, and it will take you right to the sign-up page. Now, I promised I would answer any questions that you may have. So if you have any questions, please go to the question and answer box, and I will answer them to the best of my ability, okay? Okay, let's see. For a buy, the candle has to close at or near the low, the pet D green. With what percentage of the low point does it have to close? Well, remember, if we devised a percentage, that would be close to a strategy or to a system. This is just a technique, and I said, maybe you came in a little bit later, but I said use your own discretion. And you'll get that discretion point after you paper trade for a while. So this is what we always require all of our students. We don't just say start trading this today if you become a student of mine. We say paper trade with it for a while so you get a point as to which you feel is at or near the low of the bar. It's entirely up to you. And you'll get, your own discretionary feel. Remember, our credo is that no two traders should trade alike. So where you may see a setup and you think, well, this is a valid setup, someone else will look at it and say, well, I don't think so because that's not low enough for me. I'm going to pass on that. All right? Is one better than the other? No. We want you to make your own trading decisions. This is what we said in the opening presentation. Make your own trading decisions. That's how you become a consistent trader. Okay? You mentioned about the series of bars, Steve. How many? Well, once again, that's up to you. I shared with you examples where we had maybe 5 or 10 bars. I also shared with you where we had only 2. So that's all you really need, okay? You need at least 1, all right? But once again, paper trade to see which works best for you, okay? How do you avoid steep jumps in price on earnings? Well, remember, once again, I stopped looking at earnings 40 years ago. I don't care about earnings. I don't, someone would say to me, Steve, are you going to trade ahead of earnings? And I said, I don't even know when the earnings are coming out, so I really don't care. Or for that matter, any news. If there's an employment number coming out or some jobless claim, I really don't care. I'll still trade. Now, having said that, once again, as we've said at the very beginning, you are in charge of your trading. If you want to incorporate earnings within the trade, then it's up to you. But you will get a better idea of what to do after you paper trade for a while. So please, practice with this and see how it feels for you. And if you say, well, wow, it doesn't matter what the earnings are, I feel comfortable without it, then great, then you don't need it. Or as you may say, you know what, I'm still a little hesitant about trading before earnings reports or news announcements, even with the Pat D, then great, then don't trade. This is not a system. This is simply a technique to help you become a consistent trader, okay? How long do you stay in the trade? Well, we have different ways to determine that. On our platform, we have different exit levels. Remember, we have auto-generated levels. It's up to you again, but one good way or simple way which we teach traders is to just say, listen, how much do you want to risk? If you entered into the trade and you said, I'm going to risk 2 points, well, okay, then maybe you want to make twice that amount. Then you'd get out at 4 points because you'd have a 1-to-2 risk-reward ratio. If you wanted a 1-to-3 risk-reward ratio, then you'd have a limit to exit at 6 points. You see how that works? So that's just one very generic way in which to trade. I'm sorry, someone's asking if I can show how to use the scanner. Unfortunately, can't use the scanner right now because this is not a live presentation. It's a static PowerPoint presentation, excuse me. But the scanner is so simple. I've shown it on other presentations. It's really simple to use. You just click on scan, and it just gives you a list. So in other words, let's say you're scanning the Dow 30, all right, just to make it simple, only 30 stocks. You would hit the symbol list, which would all of a sudden the Dow 30 list would appear, and simply hit scan. And in a matter, probably less than 30 seconds, you'd see all of the different stocks. If they were colored green, that would mean that the last bar was a green bar. If they were colored red, it mean the last bar was colored red. It's that simple, really easy, okay? What are strategies 1 and 3A? Well, we don't want to really go into that because we're not talking about strategies 1 and 3A today. We're only talking about the Pet D. That's an entirely different presentation. But those are great, great strategies there. And remember, a strategy is different from a technique, as we just explained. A strategy is all of the pieces of the puzzle put together. Where you enter, exactly where you enter, where you exit, exactly where to exit, and where you place your stop, exactly where to place your stop, along with money management. This presentation today was just a technique using the Pet D. You have to add your own exits, your own stop placement, your own money management, okay? But we teach all of that in the 1 and 3A courses as well. Thank you very much. You are more than welcome. I hope you learned a little bit. How often is your website data feeds? How often? I'm not really sure what you mean by how often. How often is it updated? My website? You mean Specialist Trading? That's my website, or I'm not sure what you're asking about our website. If you're talking about the data feed on the platform, remember, any questions concerned with the platform, tech support, anything with the charts, contact Pro Trader Strategies because they're in charge of tech support and they help me develop the platform. I'm in charge of teaching the strategies and the methods. So anything in charge of that, like techniques I shared with you today, but anything in terms of updating data feeds, downloads, videos, that information goes straight to Pro Trader Strategies. Remember, they're there to serve you. Don't feel intimidated or feel like you're going to have to be purchasing something. If you have a question concerning data, if you have a question concerning pricing, if you have a question concerning anything with tech support, contact Pro Trader Strategies. They can actually give you an estimate right now if you want to have a very small type of deposit placed and have some type of payment plan in place. You can get that over the phone with them and then you can decide for yourself. But remember, you can't sit on this for a couple of weeks or even a month because this full year of the platform is only going on till Friday only. So you'll get a video of this. Watch it at your own leisure today or tomorrow. But if you really are serious about taking your trading to the next level, make a decision by Friday because most likely this will go well into the thousands of dollars after this Friday, okay? Okay, good questions. As we close and take one last look at our disclaimer, I hope you learned something today. I really hope that you take your trading to the next level. Remember, as a mentor, as a teacher, I'm not here to sell you anything. If you don't want to take advantage of this, that's fine. It really doesn't take away from any of our students. There's more than enough profits to be made in a day for everyone. It's not like a finite number and we're only selling this to a certain amount because we don't want you to take all the profits. I mean, that's like going to the ocean and saying only dip your toe in because there's only so much water in the ocean. I mean, that's silly. There's enough for everyone. So we would love for you to become students of ours. If you're interested, take advantage of this great offer. Set up a payment plan with Pro Trader Strategies. And as you take one last look at our disclaimer, I just want to say thanks for taking time out of your Wednesday to come join us today. I wish you the best of luck. And most of all, I look forward to all of you becoming students of mine in the Pet D course. Thanks so much for attending. I shall see you next time. Bye-bye.